Hey guys, what's going on? Welcome to the video. So we got a healthy pullback in the stock market last week, which now puts the week ahead as a major decision point for the market on which direction we can expect next. In this video, we're going to be going over that setup and what to watch for with that, and also going over the top trade ideas to watch in the week and weeks ahead. As always, there are timestamps in the description, and let's go ahead and get into it. So starting out by taking a look at the S&P 500 with the SPY chart. In last week's video, we went over how the trend had gotten extended, and therefore a pullback or consolidation range was likely to happen next. And that pullback played out right to the biggest support that we went over last week, which includes the key 576.2 level and the 200-day moving average, which is currently at 575.76. It held right at this level on Friday, and into next week, this will be the biggest pivot to watch once again. Buyers continue to have full control of the trend as long as above here, and if it's able to hold, then this can be a good low after this healthy pullback and set it up for continuation higher next. Key resistances above are at 580 to 582, which a break above there can target 585.3, 590, 594.5, 597.5, and 600 as the key resistance levels above. For the bear case, breaking below 576.2 and the 200-day moving average would trigger a larger pullback into the gap below and put sellers back in control of the short-term trend. The downside targets below there would be 570, the 567.75 gap fill, and then 564, 562, and 560. Overall, into next week, to keep things simple, it's all about the 200-day moving average. If able to hold above it, I would continue to have a strong bullish lean on the market, though if it breaks and holds below, it's a caution signal to expect a larger pullback. So big decision point next week, and whichever way this breaks will give us a good idea on the next direction for the stock market. Now getting some trade ideas for the week and weeks ahead, starting out with Amazon, ticker symbol AMZN. So we've gotten that big and healthy pullback on this after its very large gap up, and this pullback got to the key 195 to 200 zone, which also roughly lines up with the 200-day moving average, which is currently at 200.6. This zone tested and held on Friday with a good reaction from buyers so far, so this should be on close watch now to hold as a possible higher low and set up for a reversal back to the upside. As long as that support holds from here, it can target the next levels above at 204.4 to 206, 209.55, 214.1 to 215.9, and then 220 above there. And it can be playable with a stop loss either slightly below 200 or below Friday's low at 197.85 to keep risk tight. Overall though, if Friday's low holds, this is a great look to be the start of a reversal back to the upside, and with this the SPY will also be key to watch. So now getting into a couple breakout setups, starting out with Crowdstrike, ticker symbol CRWD. So after breaking above the 383 to 398 key zone, it's been a month building out a consolidation below trendline resistance and the previous all-time high at 455.6, and the move on Friday triggered a breakout with a close right at the previous all-time high. All-time high breakouts can be explosive if they follow through, and the consolidation that built out beforehand gives this a good shot to do so. Holding above 455.6 keeps direct upside in play into further highs, though if it fakes out or undercuts that level, reclaims above 455.6 could also offer entry opportunities to play it with a tight stop loss, as sometimes it takes a few tries for an all-time high breakout to follow through, or sometimes it will go immediately. And another breakout setup to watch is one that we went over last week in DoorDash, ticker symbol DASH. So we went over how this broader setup can be looked at as a multi-year cup and handle pattern, and if we zoom into the chart, within the handle it is built out an inverse head and shoulders pattern. The trendline resistance is the key spot to watch to potentially start the breakout move, which it tested all of last week, and finally got that first close above it on Friday. So into next week, about 204 to 205 is key to hold from here to keep this breakout in play, and if it's able to do so, it targets a move back to last week's high at 209.65, and then above there would be 215.4, and larger upside would trigger above there towards 226.5, then highs above there. Draftkings, ticker symbol DKNG, is another setup that I'm keeping on close watch in the week ahead. So it previously built out a consolidation range for close to a month and a half. It broke out and rallied up to the 200-day moving average where it found resistance, and now has pulled back to retest that breakout zone as new support. That zone is at 34.4 to 35, which is key to hold as support from here. And on the upside, it's now testing the 50-day moving average as resistance, which it needs to reclaim to start upside once again. Breaking above the 50-day moving average can target 36.7 next, and then the 200-day moving average at about 38.4, which would be the larger breakout trigger above there for another swing high and open upside back to the 40 to 44 key zone. So that is everything that I'm watching for in the week ahead. Major decision point for the market, as the 200-day moving average will dictate what to expect next. Larger pullback below it, or if it holds, this can be a good swing low and head back towards highs. Thank you guys for watching, and for anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch lists, and answer any questions you guys have in there. Good luck trading the week ahead, and I will catch you all next time, and peace out.